There we go. First time streaming apparently. All right, let's start this all over again. Good morning, good afternoon, depending on where you're tuning in from, and welcome to this week's mobile coaching stream. My name is Patrick France, senior instructor here at VectorVest, and I will be your host for today's session. Hopefully, everybody should be able to hear me a little bit better now. I apologize for that. Once again, welcome everybody. If you guys can hear me, let's see some good mornings going in the chat. Let's get those going here. And as always, just to kick things off, let's make sure that you guys are smashing that like button, subscribing, or joining the Facebook page or joining the YouTube page, either one. Let's see that going. Yeah, appreciate that. Loud and clear. There we go. So once again, welcome everybody. Hopefully everybody's having a good morning so far. Markets looking a little ugly right now, and not to be surprised. Hey, good morning, Tom. Hopefully you're doing well. Today's topic is going to be very timely. I was hosting the Jockey Club yesterday, which is our live trading room we do Monday through Friday. And one of the things we talked about quite frequently in the Jockey Club is really the motivation or the thing that started the thought process of what we should do for this week, talking about VectorVest, talking about the mobile app, and how you can best benefit from it. So as always, we'll start off by taking a look at what's going on here on the homepage or what's going on right now. Then we'll dive into our topic of discussion. Then as always, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So if you guys are ready to get started, make sure, once again, hit that like button. If you're on our Facebook page, make sure to share this out so we can continue to grow that community there. And let's get right into it here today. So looking at the very top, as we can see, the Dow is down about 0.75%. NASDAQ's down over 1%. S&P 500 down 0.8%. VectorVest Composite also down about 0.8%. Therefore, that market action has our needle 3 ticks into the yellow. So today's market is neutral, and VectorVest does not advocate buying any stocks at this time. As always, if you ever want a comprehensive, detailed description or dive into what's going on in the markets right now, what to expect for tomorrow, what news you need to be aware of, and how to prepare yourself for the next trading day, make sure to tune in to the daily color guard report found right underneath the market timing gauge. It's a quick 5-10 minute long video that covers, once again, what's going on in the market right now, what's going on, what news you need to be aware of, how to prepare yourself for the next trading day. In essence, watching this quick little video will make sure that you never get caught off guard with what's going on in the markets and stay on top of things here. So give me one moment, get this set up. There we go. Had to change a quick thing there. Nothing on Facebook yet. It's showing live there, Jay. You should be seeing it on Facebook as well. I see Tom already in the chat. Let me go ahead. Tom's our first comment of the day there. So I'm going to go ahead and like that comment there. So there we go. Yeah, should be good on Facebook as well. All right. Now, let's scroll down a little bit further, getting into the color guard. Now, the color guard is where we really start to analyze the key components of our market timing system here at VectorVest. The first component that we take a look at is the price, which is the price of the VectorVest Composite. The VectorVest Composite is an arithmetic indexed average of about 9,200 stocks that we track each and every day. This gives you a better representation on what's actually occurring in the markets because it's not just looking at the Dow's 30 or the NASDAQ's 100 or the S&P's 500, but it's looking at 9,200 stocks all into one. And as we can see, it is yellow today since we are moving lower day over day and actually week over week. But since 5 days ago, we had a green light showing on January 11th. We can't go from green to red over that 5-day trading period, so therefore we do have just the yellow light showing there in the price column today. RT, same situation, moving lower day over day and week over week, but it still remains at 1, so therefore it still is going to stay yellow. If we see the markets continuing to move lower and we drop below that level of 1, we could see that red light starting to show up here in that RT column. And then finally, the buy to sell ratio, which is looking at the overall health of the market by analyzing the number of buy rated stocks in a database and comparing it to the number of sell rated stocks in a database. At 1.22, that does tell us there still are more buy rated stocks than sell rated stocks, or there's overall market strength. but we can see that strength in the market is weakening since it's moving lower day over day and week over week once again. Now, the trends of these three indicators are comprised to come up with our MTI or our market timing indicator. Now, this is going to be cast on a scale of 0 to 2, and it's looking at the underlying trend of the market. So as we can see, it's currently at 1.32, so therefore the underlying trend of the market still remains up, but just like our other key indicators, it is moving lower day over day and week over week. So we are seeing some softening with the MTI there. Now, the next column is the trend column, which stands for our primary wave the first part refers to our primary wave, which shows the short-term or simply weekly trend of the market. As we can see, it is down since the price of the VectorVest composite is lower than what it was compared to 5 trading days earlier. Second part is looking at the underlying trend or the MTI. Since the MTI is above that level of 1, the underlying trend of the market still remains up. And then last but not least, we always like to finish off with the calls column here, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. As you can see, we still remain in that confirmed up situation as of today. Now, one last thing we like to take a look at on the homepage here is the advanced declines at the bottom, showing the number of stocks moving higher for the session compared to the number of stocks moving lower for the session. When you look at this, it's a great indicator to make sure that you're getting in on a good day if you're buying long, or make sure you're getting on a good day to play the market to the downside if you're buying contra ETFs or shorting stocks. And what you want to look for is a 2-to-1 bias, putting the probability in your favor. At minimum, a 2-to-1 bias as well. So right now we have about 24% of the stocks moving higher and about 63% of stocks moving lower for the session, and then about 14% of stocks flat for the session. So we clearly have that over 2-to-1 bias of decliners and advancers. So therefore, if we're going to be playing the market to the downside, today may be a good opportunity to do so. And we'll maybe discuss a little bit some potential ideas of where you can find some candidates to take advantage of that from. And smash that like button. That's what I like to hear, Tom. All right. So today's topic, if you guys noticed the headline or noticed the title, the famous VectorVest saying. A few of you will probably guess what this is, but there's a famous saying we have here at VectorVest that you hear us say time and time again, week in and week out. The saying is, keep your eye on the MTI. Now, as we discussed, looking at the MTI in the color guard right here, it's currently at a reading of 1.32. Yesterday, reading of 1.46. The prior day before that, 1.57. When the market opened up yesterday, I was hosting the Jockey Club. We were watching this. The MTI hit a reading of 1.61, I believe, at the high. And then at that point, we started seeing the market selling off. Well, that's why we have this saying here. Whenever the MTI gets to a reading of about 1.5 to 1.6, historically, that is a great indication that the market is looking for a top. Now, I say looking for a top, not hit a top, because markets still continue to go higher for a little bit, but at that point, when you see the MTI getting to those ranges there, that's when it gives you that warning sign to say, okay, maybe I should make sure my stops are tightened up. I maybe switch to a trailing stop, so that way if the market does start pulling back soon, I keep my profits locked in and I don't give them all back to the market. Well, once again, January 17th, 1.57. Last Friday, 1.56. That is clearly within that range of that 1.5 to 1.6 range that we look for that historically shows the market's looking for a top. We hit the upper bound of that range yesterday during intraday market activity. And then from that point, we have gone from 1.6 all the way down to 1.46 in a matter of a few hours. And then today, now we're down to 1.31. That is showing us that there is definitely some clear softening, and this is why you want to keep your eye on the MTI. Now, as we always note though, there is a lower bound or a lower range that we want to look for as well that indicates when the market's starting to look for a bottom, and that's going to be around the 0.7 to 0.6 range. So right now we're at 1.31. We hit the upper bound just yesterday, or actually the last few days. So now we're looking for it to go from the top of that range and head down to the lower part of the range, indicating when the market's starting to look for a bottom here. I know, a lot of people got excited about this year starting off with a bang, seeing some, nice runs that we've had so far. But at the same time, we need to make sure we keep, our emotions in check and make sure that we follow along with what's going on in the overall market. So that way you guys don't get caught off guard, start buying in, going crazy with that, and then watch your whole portfolio take a big hit because the market reverses. Keep remembering what happened in 2022. The market slow and steadily declined. Yeah, we had a quick little run here or there throughout the year, but for the most part, we hit lower highs and lower lows. And now we've hit that high, starting to head back down here. So now that we've covered that, let's go ahead, take a look at a few different ideas of how to take advantage of the current situation. Hey, Chris, hopefully you're doing well. Glad to see you here this morning. So what we're going to do is we're going to go into the stock pick ideas. It's a great place to start off with, especially if you're brand new to the app. At the very top, you get the market timing gauge. Once again, 3 ticks into the yellow, so therefore we don't advocate buying any stocks at this time. So scrolling down, coming down, we'll stick with the premium watch list for now. Premium watch lists have a lot of great ideas, such as the indexed ETFs, bullish and bearish. Well, since we're at the top of the current cycle in the market, let's take a look at the bears, since we are, expecting to see the market continuing to pull back for the time being. Starting off, we get some non-leveraged contra ETFs, and if you're not familiar with what ETFs are, contra ETFs or inverse ETFs, let's go ahead and talk about that for a second. So an ETF, let's take the SPY, the SPY, probably the most commonly known ETF out there that tracks the S&P 500. So as the S&P 500 goes up 1%, SPY also goes up 1%. Well, a contra ETF or an inverse ETF does the exact opposite. So a non-leveraged ETF or non-leveraged inverse ETF would go down by 1% as the S&P goes up by 1%. Well, if the S&P goes down by 1%, that non-leveraged S&P 500 or inverse ETF goes up by 1%. So therefore, it can act as a great hedge for your portfolio. But as you can see here, first one, not looking at the S&P 500, looking at, if you read the name, Pro Shares Ultra Short 30. 30 typically stands for the Dow. But if you're not familiar with it, all you got to do is tap on it, click on the stock analysis report, and right at the top in the business description, it'll tell you exactly what the ETF is looking at. So as it states, the investment seeks daily investment results before fees and expenses that corresponds to 2 times the inverse performance of the Dow Jones Industrial Average. So as the Dow falls 1%, this rises by 2%. Therefore, great if you're a short-term trader, so that way you can capture a little bit more profit quickly, so that way you can get out faster, make those quick returns, and move to the sidelines before the market starts turning back around. Hey, there we go, Jay. Now I see you on the Facebook side. Glad to have you here. All right. So, as I mentioned, though, that said 2 times. There's 2 different styles of regular and inverse ETFs. There's non-leveraged and leveraged. Non-leveraged means there's no extra movement or there's no extra, once again, leverage to it. So let's go back to our S&P 500 example. As the S&P 500 goes down 1%, a non-leveraged inverse ETF goes up by 1%. Now, if you add leverage to it, that means you're going faster or at a faster rate than what the main or underlying fund is doing. So if the S&P goes down by 1%, a leveraged ETF will go up typically by 2 or 3%, depending on which one you're looking at. As we saw, DXD is a 2 times leveraged ETF. So therefore, it goes up twice as fast as the Dow falls. So then you have, getting out of this one, SDOW. Let's take a look at the stock analysis report. this is a 3 times leveraged inverse ETF. So as the Dow falls by 1%, this rises by 3%. That may sound great, but at the same time, the opposite side is true. So if the Dow starts running again and the Dow goes up by 1%, this is dropping 3% that day. So if you're more aggressive to speculative or just a momentum trader, you may take advantage of the 3 times or 2 times leverage ETFs. But if you're more of a conservative or prudent investor, the 1-to-1 will give you that nice balance of risk to reward and help you be able to hedge your portfolio without having to get caught off guard or having to pay close attention on, throughout the day to make sure that if the market starts running, you're getting out or you're not getting whipsawed too much there. Starts. Perfect. Awesome. Got the assist from Joey. There we go. Also, if you guys are just now tuning in and you haven't already, make sure, as always, smash that like button right now. All that helps us out with the YouTube and Facebook algorithms and helps us continue to grow this amazing community. So if you want to see more of these and you want to see these continue, you got to help us out. Make sure you do that. Once again, doesn't cost you a thing, so what are you waiting for? You might as well. All right, so getting out of here, those were for the Dow, but this list that we're looking at here has non-leverage and leverage mixed in. So if you're using this list, make sure to take a look at what you're looking at the equity. Take a look at that stock analysis report to make sure that you're comfortable with the ETF that you're looking at. So we've talked about the Dow for the most part because the top 3 are Dow related contra or inverse ETFs. So let's take a look at the final one, the dog. Going down, pulling up the stock analysis report. ProShares short Dow 30, exchange traded fund, that launched by ProShares. You don't see any mention of leverage. So therefore that tells us this is a non-leveraged inverse ETF. So as the Dow falls by 1%, this goes up by 1% and vice versa. Getting out of here. Let's say though, you're not a fan of the Dow. Well, you see the Qs and the quick name on the left-hand side under, let's say, PSQ. QQQ is usually indicative of the NASDAQ. So let's go take a look. Let's say you're more tech-heavy invested. You want something to offset a potential drop in your tech stocks. Maybe you're looking at, a NASDAQ contra or inverse ETF. So we go take a look at the stock analysis report. This investment seeks daily investment results that corresponds to the inverse -1 time the daily performance of the NASDAQ 100 index. So therefore, this is a non-leverage, moves 1-to-1 with the NASDAQ 100 index. If you wanted to get a little bit more leverage though, QID, pull up the stock analysis report. Investment results that corresponds to twice the inverse daily performance of the NASDAQ 100. So here's the 2-timer. Want to look? Here's S&P 500, notated by the 500 right there. If we scroll down, we're going to have to scroll down probably a little bit more. SQQQ, QQQ once again, indicative of the NASDAQ. Taking a look at the stock analysis report. You have the 3-time leverage inverse ETF. So no matter what style of investor you are, if you're looking to hedge yourself, if you're worried about the market conditions, this is a great place to go to find an ETF that you'd be interested in. Now, another thing, if you're not, if you're somebody that's more speculative to aggressive, you like to take advantage of stocks when they go up, you like to play them to the downside when they go down. AKA you have a margin account and you like to short stocks. Well, VectorVest has a few great searches here to help you out. So we're going to go out of this. Actually, we'll just go to the screeners on the left-hand side, make it easier. Jump into the featured screens. Scroll down a little bit. First, want to take a look at worst stocks above 20. Now, as I mentioned in our Jockey Club a lot, whenever you're going to be shorting stocks, you have to borrow those stocks from your broker to be able to sell to somebody else for the time being. So therefore, your broker has to have those shares available or in inventory. A good general rule of thumb is anything over $10 a share should be easily able to locate, or your broker should probably have those shares, in inventory that you could borrow from. Anything below $10, you're probably going to run into a lot of issues trying to locate or trying to borrow those shares from your broker. So if you find a stock that looks really good to sell short, but it's under that $10 price filter, check with your broker, because every broker is different. But odds are you're going to have a hard time trying to be able to borrow those shares to be able to short them. So therefore, worst stocks above 20, well above that $10 price range we were talking about. So most of these stocks, you should have a relatively easy time being able to borrow from a broker to be able to short them. And then starting off at the very top center, Guardian Health. If you're shorting an individual stock, you're not just playing the broad market move. You still always want to take a look at the analysis on those stocks and make sure that the analysis is the exact opposite of what we tend to look for. So what you're looking for is a poor relative value or poor long-term potential in a stock, like we have here with an RV of 0.13. A lot of risk involved with this stock, meaning not a consistent balance sheet or, missing earnings quarter over quarter, year over year. Well, this one has an RS rating of 0.52. Therefore, a lot of risk involved with the stock. Timing, 0.43. It tells us it's in a strong decline. RT, once again, looking at that short-term price trend. And since it's cast, all of these are cast on a scale of 0 to 2. Below 1 to closer to 0 it is, the stronger the downtrend. So at 0.43, that's falling pretty hard right now. And then the combination of these gives us our overall VST rating. Below that level of 1, currently at 0.41, tells us this is a really poor stock from a fundamental and a technical basis. So therefore, these are the types of stocks that you want to short in a market that's falling. Taking a look at the next one, INBX. Another one, poor long-term potential, a lot of risk associated with it. It's in a decline on a short-term basis, but not quite as much as the other one, but still moving lower overall. And it has an overall poor rating on the stock as well. So these are the kind of stocks, once again, that if you're going to be shorting stocks, these are the ones you're going to be putting your primary focus on. And that's why this list is called the worst stocks above 20, because it's looking, if we look at the parameters here, has the basic information such as average volume greater than 100,000. The recommendation or the rating is a sell, and then stock price greater than 20, and not on a pink sheets or an exchange that you wouldn't want to be buying from anyways. And the main power is going to be coming from the sort. VST ascending. So it's bringing you the worst VSTs right to the top of the list to save yourself a lot of time. So that way, you can start from the top and easily find some great candidates very quickly and easily right in the top of that list there. What does shorting stocks mean? So shorting stocks is betting the stock will go down. When you buy a stock long, you're betting the stock is going to go up. And as it goes up, once it goes up enough and you take your profits, you make money that way. As a short, you borrow the shares from your broker to sell to somebody else. They think that stock's going to go up. You think the stock's going to go down. Let's say the stock is at $100. You borrow those shares at $100, sell them to that person at $100. You get that $100, that credit for those shares right up front. And then let's say a month goes by. Now those shares that you sold somebody for $100 are now only worth $80. You say, okay, I'm done with this trade. I'm buying back those shares at $80, selling them to your broker or giving them back to your broker. You keep that $20 difference a share. Now, this is why a lot of people say that shorting is very risky, because it has unlimited upside or unlimited risk potential. And that's if, you bought those shares at $100 from your broker to sell to somebody else at 100 at that point. Then all of a sudden they go to 120. And you say, all right, I can't stick around any longer. I want to close out my trade. You buy back those shares at 120. Now you have to put up $20 a share of your own money to buy them back, and you take that difference, or you take that loss. You take that difference as a loss there. So shorting technically can be unlimited risk potential or unlimited loss potential if you don't have a trading plan in place, if you don't follow a systematic approach like we've been talking about here, like we did with the 28-day portfolio challenge, where you develop a trading rules. So knowing when to buy, knowing when to sell, and if you don't have that when to sell aspect built in, then yeah, if you freeze like a deer in headlights when the stock goes up and you don't ever close out, yeah, you could potentially, have infinite loss theoretically. But as long as you're somebody who's more, disciplined in nature, you follow certain stop criteria, you can, remove your emotions out of your investing, then shorting stocks really isn't that much different than buying a stock long. So there's no link that gets sent out, Andrew. If you're wanting a replay after we finish our live stream here today, you can find it, the recording on our Facebook page, or I believe on our YouTube page once they put that up. It'll always be archived right there for you. Perfect. So yeah, realistically, if you're in actual practice, shorting and buying a stock long is really not that different. The only thing that's different is that you have to have margin to be able to short. You don't have to have margin to buy a stock long, because what money you put in is that money going towards the stock. Whereas margin, the reason why you have to have margin is because if that stock goes up, the broker has to know that you have money available to be able to cover that difference there by the time you close out of it there. So that's where the margin comes in handy. But any one of these stocks, as long as you're following a systematic approach, you can find some really great candidates to trade to the downside. Now, last but not least, another option, a little bit more broad range or broad net being cast, is new sell rated stocks. Here you're going to find stocks that just hit that sell rating as of today. Now you may be asking yourself, what is that? It says sell. What does that mean exactly? So VectorVest uses a buy, hold, and sell rating on every single stock every single day. And these are not just, some randomly generated words that we throw on every single stock. These are all based upon a systematic approach and a systematic rule set. That way, you guys are able to compare apples to apples rather than apples to oranges. So whenever a stock hits a sell, that tells us the price is below that stop price, or a 13-week moving average adjusted for the company's fundamentals. It's in a decline. By the time it gets to that point, the RT is below 1. Most likely the VST is below 1. So there's a lot of worrisome signs, and these stocks are just hitting that sell rating right now. And at the top of a market, when the market starts rolling over, these are just hitting that sell. It tells us they have a lot more downside potential here. It's like a notebook. Stay within the margin. I like that, Fireblazer. All right. One thing I will say though, when looking at them, one tip, look for stocks that are overvalued, because if they're overvalued, that tells us they have more room to come down in a top heavy or overbought market. So for example, SMCI is undervalued currently, because you can see right here in the extended data, the price is trading at 70.22. The value is at 121.03. So therefore, since the price is under that value, the stock is undervalued. Now, if the price was over that value, that would indicate that the stock is overvalued, and you would see that noted right next to the value itself. So if we keep going through, another stock that's undervalued here. Let's see if we can find some overvalued ones. It's going to be maybe kind of difficult since the market's been so beaten up. A lot of these poor stocks, or a lot of these stocks, have had a hard time here. So not finding any in this list. Let's go back to the other one real quick. Worst stocks above 20. Take a look. This one. Value, $2.45. Current price is $23.06. People who are buying this stock right now are paying a huge premium to own that stock. Doesn't make a whole lot of sense, especially when you analyze the analysis on the stock as well. So therefore, this makes a great potential short trade. Look at the next one. GH, another one that's grossly overvalued almost by a factor of 10. Poor fundamentals, everything that you're wanting to look for. the market starts rolling over, the stocks with the worst fundamentals are the ones that tend to get hit the hardest. VREV, another one that's grossly overvalued. Negative forecasted earnings growth rate over the next 1 to 3 years, negative earnings yield, negative PE ratio. What more could you ask for if you're looking for a cruddy stock to make some money off of? Cheap stocks can always get cheaper. That's 100% accurate there. All right, so if you guys have any questions regarding anything that we covered here, make sure to let me know. If not, let me see some of those symbols that you guys want to see analyzed, and I'll show you how fast the VectorVest Stock Advisory app can make analyzing any stock out there. And while you're typing those in, once you type in a symbol, if you want to see your stock analyzed, make sure that you're smashing that like button. And if you're on our Facebook page, appreciate you guys. And make sure you're sharing this out as well with all your friends and family. So that way it helps us out with all the algorithms. And we can continue once again to grow the community. Doesn't cost you a thing, so you might as well. All right. Fire Blazer. You can't argue with a wife, but I don't think that. Wives are always right, but between you and I, as long as she's not watching right now, I don't think that. If she is watching, you're 100% right. All right, Netflix, NFLX. Siberia Visitor. I typically do them at 11 a.m. every Thursday. Unless there's something that unforeseen that gets thrown out, they're typically at the same time every week. All right, Netflix. Poor long-term potential, a little bit less risk than the average stock out there. You do have a slight uptrend starting to form. Overall, the stock's average at best. At the top of a market, with a low RV and or VST basically flat, I'd be cautious. At least tightening up stops. Yeah, it's still in a short-term uptrend, but once again, it's been in a short-term uptrend. The market's starting to peak. I would definitely make sure that your stops are set in place on this one. VICI. Great long-term potential. Less risk than the average stock out there by a little bit. You are in a slight uptrend below my personal level of 1.1, but still in a slight uptrend. I'd just be paying close attention to that right now. Overall, the stock is favorable still though. Let's see what else we got. RELL. Great long-term potential, less risk associated with it. You're in a steady uptrend. Overall, the stock is definitely favorable here. Siberia, appreciate that. Glad you could be here today. Thank you for tuning in. GEHC. Poor long-term potential, a lot of risk associated with it. You're now starting to move lower. Overall, the stock is not favorable. Stock is 2 times overvalued here as a short trade. I don't know if this was designed or if this is being put in as a short trade, but this would be an ideal candidate for a short trade here. All right, NVDA, poor long-term potential, but you do have a strong balance sheet, so therefore less risk associated with it. You have been in a steady short-term uptrend, still are, but starting to pull back a little bit. Overall, the stock is still favorable, but once again, keep your eye on the MTI, folks. Look at the stock. The value is at 75.20. Right now, it's trading over 2 times its value. Be careful. Let's see. PLUG. Poor long-term potential, a lot of risk associated with it. You're basically flat on a short-term basis. Overall, the stock is not favorable. Poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, not favorable here. CELH. CELH. Don't have it in the cup this morning because wanted to add some ice to keep it cold, but there we go. Stock has great long-term potential, less risk associated with it. However, it is pulling back right now. Overall, the stock is favorable and it's delicious. RWM. So, an ETF, looking at the Russell, looks like it's a one-time since it doesn't say Ultra there. Ultra usually references the leverage. So once again, since we've been talking about ETFs, VectorVest makes analyzing any ETF out there extremely easy. Because it's not an individual company, it doesn't report quarterly earnings, it doesn't have a balance sheet that needs analyzed. The fundamental indicators, the RV and RS, are always going to be pegged at 1. So therefore, when analyzing any ETF out there, your primary focus is RT. At 0.88, it does tell us that this stock or this ETF is in a downtrend and that is not favorable. But if you're speculative, we know what's going on with the MTI. Maybe start dipping your toes in the water, adding a little bit here or there, and that way developing that full position. So once as it continues to move higher, the RT crosses above 1, you're speculating that it's going to do that. So this is, the entry you would take as a speculative to aggressive trader. But if you're waiting for the more prudent approach, wait for that RT to cross above 1, and that way it would become favorable again. Let's see. W as a short. Wayfair, poor long-term potential, a lot of risk associated with it. You have been in a slight steady uptrend, but that's below my level of 1.1, so really just flat. Overall, the stock is not favorable. Taking a look at it, value is at $3 a share. Trading price is at $38.75 roughly. Yeah, Jay, this is a great looking short trade candidate. I like what I see here with that one. CLS. We'll do a couple more here. CLS, good long-term potential, but does have a lot of risk to get to that potential. You have been in a short-term steady uptrend, so overall the stock is favorable. Let's see. TSN. Poor long-term potential, but does have a pretty strong balance sheet, so less risk associated with it. However, you have been in a steady decline and still are. Overall, the stock's about average at best. TH, good long-term potential, but a lot of risk to get to that potential. You have been in a really strong short-term uptrend. Overall, the stock is favorable, and it's still undervalued right now. So things are looking good even with the pullback right now. But with the overall market conditions, make sure that you have some stops in place just in case. And last but not least, we'll do AMD. AMD, great long-term potential, less risk associated with it. Timing, however, is flat. Overall, it's a good stock because of the fundamentals, but the timing is definitely something that's worrisome right now and you need to pay close attention to. Scrolling down, good news is it is undervalued currently, so that's definitely a positive. All right, so jumping back to the homepage, taking a look at what's going on now. The Dow continuing to move lower, down 0.7% for the session so far. NASDAQ down 1.1%. S&P 500 down 0.9%, same as the VectorVest composite. And now if you notice the gauge, we're now mildly bearish, and VectorVest still does not advocate buying any stocks at this time. No surprise, we talked about it earlier. The RT finally crossed below that level of 1, bouncing right around that 1 to 0.99. So it's teetering on that red light here today. So we could potentially finish off with 1 red light by the end of the session. Maybe 2 if the buy to sell ratio gets even, if we see the market start really selling off. But for right now, the highest probability is we'll finish out with 1 red light here today. All right, so thank you all for tuning in. If I didn't get to analyze your stocks, I do apologize. We had a lot of requests here today. As always, if you are a subscriber, just simply pull up the app, download it if you don't have it already, sign in using the same username and password you use for the VectorVest 7, and then tap on that magnifying glass in the upper right, type in your symbols, and you can do the same analysis wherever you're at on the go anytime. If you're not a subscriber, make sure to click on the link down description of today's video and sign up for the 2-week free trial and put it to the test. As the old saying goes, seeing is believing. So with that, that's going to do it for me today. Thank you all for tuning in. It's been my pleasure being with you guys. I hope everyone has a great rest of your trading day. Be safe out there. And as always, keep your eye on the MTI. So until next time, take care, adios, and toodles.